Good day, ladies and gentlemen. In this video, I want you to actually go to the comment section and tell me how you manage your trade. So if you're a Forex trader, please go to the comment section and tell us how you actually manage your trade. I'm going to paint the three scenarios, that Forex traders actually use when it comes to managing their trades. Then you tell us which category you fall under and which one you use, okay? So basically, for those that don't understand what trade management is all about, trade management has to do with the things you do while you are in a particular trade, okay? For example, let's say I enter the buy trade at this particular level, okay? Let this horizontal line depict the level where I actually entered a trade. So let's say this horizontal line is the level where I entered a trade, and the trade is a buy trade. You would expect me to place my stop loss below that level, so probably somewhere around here is where my stop loss is going to be. So for the first category of traders, if they have placed their stop loss and their take profits, they don't move it. That's the way they manage their own trade. They just let it run that way, okay? So that's the first category. Now the downside of this particular category, based on how I see it, is that price could actually move considerably in your favor and put you in a lot of profits, but just because it did not hit your TP, it could come down and take you out on your stop loss, okay? So that's very painful. You just come back to the chart and see that price moved very, very close to your TP, almost kissing your TP. Then it turned around and took you out on stop loss. So that will actually reduce what you have in your balance, so it's quite painful. So that's the first category of traders. Now the second category is the category I call the break-even category. So those ones, when they're in a trade and it has moved in their favor considerably, what they do is they move their stop loss to their entry position. So if the stop loss was below this level before and they entered at this level, they will move the the stop loss to this particular position where they entered, okay? So even this particular price action now, I can use it as the example, so you can see where price is currently dancing above this level. So at this point, the trader can decide to move the stop loss from its original position to this level, okay? So the downside with this is that price could decide to retest the entry level. So when it retests the entry level, it's going to take you out on break even, and then it will push in your direction. So those that did not move their stop loss are going to be in profits, okay? So it's more or less like almost every system has its own downside. Now the third category is those that actually lock in some profits, okay? They save some bread for the next day, all right? So if price has moved in their favor, they move the stop loss to lock in a small amount of profits, okay? So in case price retraces, it won't take them out on break even or stop loss. It's going to just take them out with a little bit of profit. Now the downside to that is any deep retracement that price does, just know that you're out of the trade. And as we all know, when price is moving, it does not just move straight, it will always retrace at some point, okay? It's going to retrace at some point. So any small retracements, you are out of the trade. Whereas those that did not use that your trading trade management system of locking in some profits, those ones, the retracement will not take them out, okay? So if it retraces, it's going to take you out. Then those that did not use that system, they are going to continue getting profits, because if price retraces and it wants to continue, it means it's going to push higher, and the profit is going to be greater than it was before, okay? There are a few people that use one other system, so let me quickly hint on that system because I know about it. Now that system has to do with, they call it halving their risk, okay? So they cut their risk by 50%. So if what they were risking before was, let's say, $10 based on the stop loss position, when price moves in their favor, they halve the risk by moving it to a $5 position, okay? They'll move their stop loss to a $5 position. So these ones are not locking in profits. So what they do basically is they cut off their potential loss by 50%. So in case price decides to go crazy and come back to the below their entry position, if you stop them out, and it won't be the total stop loss that they started with, it's going to be half the amount they were willing to actually lose. Okay, so basically go to the comment section and tell me the system you think is the best, the system you use, so that we can also get to know more. Probably you have some reasons behind it that I've not touched on, so you just let us know in the comment section. All right, so if you're a new viewer, please subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.